Good day. Thank you for joining me. Today I'll take you through Johnson& Johnson's results for 2020. On the 26th of January, the company reported better than expected results with sales up 0.65% operationally. Primarily, this was driven by an 8.4% as well as 3.1% increase in pharmaceutical and consumer health divisions respectively. Adjusted EPS increased by 7.5% year-on-year. Our dividends per share were also up by 7.7% for the period. Management also provided FY21 guidance with operational sales expected to be up by 8.8%, while operational EPS is expected to grow by 16.4%. As previously alluded, net revenue was up by 0.6% year-on-year for the group. We also saw a reduction in GP margins as cost of sales increased and accounted for 34.4% as a percentage of sales, which is higher than the amount that we saw in FY19. R&D continued to increase, but it was partially offset by in-process R&D spend. So it fell from 890 million that we saw in the previous year to 101 million for the current period. Overall, the numbers tracked largely in line with FY19 numbers with few deviations. In terms of segment performance, J&J's story has remained consistent over several years, with pharmaceutical division as the strong performer and strong driver of sales growth and healthy margins, while medical devices and consumer health businesses create drags. For the consumer division, for this period alone, we saw a margin expansion, as you can see on the graph, but we're not sure if this trend will continue into FY21. Following the release of the results on the 26th, the share price closed 2.7% higher. On an earnings basis, our earnings have been on an upward trend since our last neutral recommendation, which was on the 13th of October last year. This was on the back of the vaccine news. On the 29th of January 2021, the group announced that its COVID vaccine demonstrated 66% efficacy based on the first interim analysis of its phase 3 results. While this is low compared to the numbers that we saw for the likes of Pfizer and Moderna, which average around 95% efficacy, these numbers are still decent when we take into account that they factor in the contagious variants of the virus. We wish to highlight that this remains a not-for-profit project for Johnson & Johnson, at least for FY 2021. Thus, during this period, we only see qualitative benefits concerning offering the vaccine. These include marketing as well as word of mouth. On a forward PE basis, the share trades at a 4.1% premium to its long-term average of 16.4 times. We would also like to draw your attention to the following disclaimer. Thank you for your time.